Good morning, everyone. Welcome. My name is Simon Mack, and I am the Executive Director of the Caruth Institute for Entrepreneurship at the SMU Cox School of Business in Dallas, Texas, where we will be celebrating our 50th anniversary in August. Today's event is part of the Blockchain Program Initiative at the Caruth Institute, where we provide the latest in blockchain-related business and entrepreneurship information to SMU and the community at large through events such as today's webinar, and also offer formal classes in blockchain entrepreneurship. I want to thank Julianne Deering and Nancy Hong, the team at the Caruth Institute, and James Stewart at the Cox School of Business for helping to put this webinar together. Now, I'm going to make some announcements and then go right into our program. As you can see on the screen that says Caruth Institute, we have 3 future programs that might be of interest to you. First is our Starting a Business course, which will be offered online again, starting in the fall of October the 6th. We offered it online for the first time in 49 years this past summer, and it was very nice to have students from outside of the Dallas and Texas areas join our course. So if you know anyone who is looking for some basic training in entrepreneurship and business, you can go to smu.edu/SAB to register. The second program is our annual Dallas 100 Entrepreneur Awards. We are celebrating our 30th year in recognizing the 100 fastest growing privately held companies in the Dallas area, and the award ceremony will be October the 22nd. And this is open to the public. So go to smu.edu/Dallas100 for more information. Finally, our next webinar will be the September 17th Southwest Venture Forum. This program will be an update on private equity. And you can also watch 2 entrepreneurs pitch their startup ideas. The price for this event will be pay as you can, and you can register at smu.edu/SWVF. Okay, I will be your moderator for today's webinar. Please use the Q&A function for questions. We will have a formal Q&A session at the end of the webinar, so I suggest you jot down your questions as we go along and then type them into the Q&A box. Now, we may not be able to answer all questions, so I'll try to pick the questions that are the most common from among the audience. Also, please use the chat function only for non-Q&A messages, like some sort of technical issue that you may be having. Well, let's get started with the program. In October 2008, someone or some group of people by the name of Satoshi Nakamoto wrote a paper called Bitcoin, a peer-to-peer electronic cash system. This short 9-page document officially ushered in a new anti-government movement in creating a non-regulated digital currency called Bitcoin that has seen its price go as high as $20,000 and currently resides at about $11,000. Along with the advancement of Bitcoin was blockchain, the underlying technology behind Bitcoin. Since 2008, the technology of the original open source Bitcoin blockchain has been copied, revised, updated, and spun off into literally thousands of different blockchains, such as Ethereum, Ripple, Tether, and even the Facebook coin Libra. Early blockchain startups with their own cryptocurrency or token were created in hopes of monetizing the vision of a global payment system that is not regulated by a government entity. Later blockchain startups were created in hopes of monetizing the core features of blockchain, which are storing data that is decentralized, distributed, and immutable. And they wanted to apply these features into other use cases besides payment systems. So, are Bitcoin and blockchain commerce here to stay? Well, that's what we're here to talk about this morning. We have two outstanding expert panelists who are going to give us their answer to this question. The first is T. Jack Williams, who will answer this question from an entrepreneur's perspective. And then Hamez Mushtaq Awan will come on and answer this question from the perspective of an investor. So let's get started. I first want to introduce T. Jack Williams, president and co-founder of B4U Financial LLC. Mr. Williams brings over 35 years experience in the consumer payments industry. His area of expertise ranges from merchant acquiring, while at NPC Louisville, processing about 6 billion annual transactions for global merchants, to prepaid debit card processing as CEO for Ecom Link. His expertise expands all payment card platforms and ranges from the development and implementation of the first gift card to AML, anti-money laundering, regarding the illicit use of payment cards by criminals. He is generally acknowledged as one of the most knowledgeable individuals in the world regarding the use of prepaid access devices, cryptocurrencies, and mobile payments, and their money laundering use by criminals to fund illicit activities. There's kind of a theme here. Having developed and implemented over 400 payment systems, he brings a unique blend of payments expertise. He contributes his expertise to the International Red Cross as a payments subject matter expert, for example, in Haiti and in Houston. B4U is a global network for merchant and ATM processing and acquiring of blockchain currency consumer transactions. Jack, I thank you for being here this morning. I now turn over the screen to you to share your presentation. Jack, we're all yours.
Well, thank you, Simon. And it is certainly a privilege and an honor to be able to be part of this program today. So thank you so much for that. So let me loop this in real quick. So it jumped the wrong way on me here, so give me just a second. So what we're going to talk about today is blockchain commerce. And nothing is changing faster than the payments landscape that we all will use in the years and months ahead. But let's take a look at the history. So if I told you 10 years ago that the largest merchant would be in the United States would be a bookseller that used to handle our daughter's books at SMU, you would have laughed at me. And so if I had told you that 12 years ago that we would be shopping online and roughly $2 billion was transacted. So today it's roughly a little over $600 billion. And so we, as a payments landscape, are in the midst of a significant change from what we'll call paper fiat currency to digital currency. And that's kind of what we want to talk about and to share my views on where we're going and why this is so important. And it's been driven to some great degree by COVID. And I think that has kind of accelerated. It hasn't changed, but it has accelerated this adoption. So a little bit just to kind of tag on to what Simon said, we are a network. Think of us like a Visa. We don't Visa doesn't issue cards, nor do we operate as an exchange, but we connect the dots for all the different players. And so you think of us as a global network for the authorization, the clearing, the settlement of these transactions. Because if you think of Visa, it did not exist and had all of these banks trying to sell their credit cards, there would be no economies of scale and it wouldn't work. Well, that's the step that we want to take in behalf and with the, we'll call it the crypto blockchain currency industry. And so, but it's changing. And so what I want to show you is the change. You're used to a plastic card, and I think plastic cards are on their way out. I think the future is a mobile device. I think that is how we will be using our finances, and we'll be showing you how. But to kind of see the difference, since everyone knows what a card transaction is, then let me show you what a ATM transaction.
Hi, my name is Jack Williams. I'm president of B4U Financial. We're here at the NAC show with Hyosung, and I want to give a demonstration of our platform that allows you to withdraw cash using Bitcoin as your funding source directly from the ATM. With that, the first step is you activate the B4U application on the device. The second question is, do you want a receipt? We'd say yes. This machine supports $10 to $200 withdrawals. So we'll put in $10. And now it's disclosing that there is a fee for the transaction. In this example, it's $2. Do you accept? Yes. And so now what's happening is this device is contacting the B4U platform. We've also sent a message that says, get your QR scanner ready on your phone. And now you have roughly 2 minutes, and you move your scanner over the QR, and now you continue. Yes, the transaction is now being sent. There is the transaction has been approved. Now the funds will be coming out of the device as deploy them. And then the last thing you will receive is a receipt that will give you all of the information on this transaction, including the transaction hash, the Bitcoin address, and it will give you all of the information. Plus, we'll put it up on the screen for you so you can see the address, the transaction ID, and the transaction hash. So if you wanted, you could follow it throughout all of the blockchain. With that, we say thank you very much for your time. We hope you'll enjoy watching what we've done and adding it to your inventory on your ATMs. Thank you very much.
So what we've seen is a fundamental shift from a plastic card that has a magnetic stripe and a chip on it to a QR code that will reside in a wallet that's part of your mobile device. So issuers today incur some substantial fraudulent transactions. It's in the billions of their losses. And one way to be able to cut that would be the use of a QR code. So it would begin to ease in. So what does that drive? That drives the importance of digital currency. So what we call blockchain currencies is going to be the future, because not only for the banked, and we many times focus on the banked in this country, but this allows the unbanked, those who have a smartphone, to be able to be part of the banking community and be able to transact, send money, to do many different things, but they're using digital currencies, not plastic or paper currency. And so when we look at what's the future, what do I think is, and then we'll talk about it, Bitcoin, you hear a lot about it, Bitcoin, and Simon is right, it's over 11, and some of us think it's going to get much higher. But that's only a small part of the consumer payments landscape. And these are the top 5 and that there's out there. But there are 5,563 cryptocurrencies operable on the blockchain. So I believe that the future is going to be a mobile phone will replace plastic cards. And if that's true, then a digital currency platform will be required. And so blockchain currencies will begin to come on to their own. There are many advantages to blockchain currency: speed, safety, security. And then, so what we're seeing is now there's a movement in the early days of that Simon talked about. But today, now we're entering a new world of CBDC, they call it, central bank digital currencies. And what's that is the first step of the globalization of digital currencies in the world. And so you'll be seeing a time when ATMs, that's what we can do, we process multiple digital currencies because that may be, if you're a visitor from China, you'll have the digital yuan. If you're from Japan, a digital yen, because it resides on your phone, it's safer, and it's much, much more difficult to hack. And so I think that we're also going to see the importance of legacy consumer banks will be diminished for sure, if not begin to vanish. So let's take, what I want to do is, in the minutes we have left, I wanted to take a kind of a quick tour through the headlines. These are all within the last couple of weeks, but the whole blockchain currency era, the whole time, is about to begin. In the past, when I would talk to a bank, they'd look at me and I'd say, oh, I process merchant transactions for Bitcoin. They look at me like I'm the Darth Vader of currencies, that this is what a terrible thing, but that is changing. The days of Silk Road and the criminal use of a blockchain, which was only a couple of percent, were, I guess, enlarged to be greater than what the reality was. And so now it's changing. Banks are beginning to be open to digital currencies. But you may have seen, so let's look at some of the headlines. You've seen where stores, I'm actually in the Fort Worth area, and we see stores just about everywhere saying, oh, we don't have change. We need you to use your card. Well, that's great if you use your card and you have a bank account, but that's not great if you're one of the unbanked in this country. And so coins and change is going to become more and more difficult as they extract that out of the payments landscape, and we can move to digital transactions, because in our world, we can process down to the Satoshi, which is 1/100 millionth of a Bitcoin. So what's happened? The United States is moving much closer to a digital dollar. They're having committee hearings. I've had conversations, I mean, I'm sure with many. But what I believe that what we as entrepreneurs bring to the game is that that's great. They created a digital currency, but if people, citizens, do not have a way to liquefy or to liquidate their currency, it's one thing to be able to get the currency. You can buy Bitcoin today, but it's important that you be able to cash out your Bitcoin or cash out your digital dollar. And I guess that's when bureaucrats market, but maybe they'll come up with a better name, but the digital dollar is going to happen. And so here's the guy at the Federal Reserve in Boston, and whenever they speak from the Federal Reserve officially, you know the comments are all been fine-tuned or handed to him. But he did say that has no immediate plans to launch. Well, immediate is a key word in that sentence. Yeah, it's not going to be tomorrow, but it's going to be soon. So another green light that came out was the banking regulators. This past couple of weeks, they have green lighted the custody by banks of crypto. That's a major, major step in the normalization of blockchain currencies for us. England, around the world, there's approximately 39 different countries that are a ways down the road to creating their own government-backed digital currency. England, the EU, just about throughout Africa. We work with a couple countries in Africa and one in South America that is seriously considering implementation of their own government-backed digital currency. And the difference between these two is that a digital currency that's government-backed does not change in value, just like the US dollar doesn't change, whereas Bitcoin does change. I mean, it's up to 11,000. It could be down to 3,000. It could be up to 100,000. And so they sometimes refer to these as stable coins. And so I want to be part of the processing of stable coins because it will impact each and every one of us in the years ahead. Japan is very well. So they are probably going to be the next entry in the government-backed. And then we also know that China has released its digital yuan. And so the digital dollar is not going to be far behind. And this provides speed, security. There are many reasons why this is for us. So where are we going from here? What are we going to do? I think mobile phones with an extensive AI, artificial intelligence, are going to drive our lives. We're going to see that the mobile phone, more so than it is today, will become the payment tender, will replace our wallets. And it's not along the lines of just putting a credit card on a digital phone. It is the actual digitizing of currency. So this Internet of Things, one of the biggest, I think, impacts we're going to have is the IoTs, the Internet of Things. And how do we pay for these Internet of Things? Digital currencies. Digital currencies are going to drive government and businesses. It's much faster for a business to pay its invoices by blockchain. I think some of the payment platforms like SEPA, SWIFT, and the other global payment programs, they're going to become outdated. It's going to be kind of like a shopping mall is today that is just empty of merchants compared to what it was 10 years ago. And then lastly, I think that we're looking at a new era. We're looking at a time when these payment platforms, digital currency, what we call blockchain currencies, whether it's open loop like Bitcoin or those, or it's digital backed by a government, or it's a loyalty program, or it's another application, the mobile phone, the QR are the centerpieces of that functionality that many entrepreneurs are looking for. And we're all out there looking for differentiation, blue water sailing, they call it. That is, we want to be involved in this industry from the very beginning. And it's going to be platforms we never even thought about. Google's coming out with its computer eyeglasses pretty soon. No telling what that's going to look like in 10 years. So with that, I say thank you very much, Simon. I'll turn it back to you. And it's been a privilege again to be part of this presentation.
Jack, thank you for your insights and the cool story of B4U Financial. If you have questions for Jack, please save them until the end and post in the Q&A box. All right, next I want to introduce Hamez Mushtaq Awan, partner and founder at Plutus 21 Capital. Hamez focuses on operations, risk management, and overall strategic growth of the firm. Hamez has more than 7 years of experience investing in a variety of alternative strategies across multiple countries. Hamez has been involved as a principal investor in deals totaling over $40 million on behalf of partner and family capital. Growing up in Karachi, Pakistan, Hamez saw the effects of economic and political instability firsthand. Given this experience, Hamez is motivated to understand the many problems faced by the developing world and is confident that blockchain technology will be an important part of the solutions. Hamez believes that the unique background of the Plutus 21 investment team gives a unique edge for not only internalizing the problems faced by billions around the world, but has a better chance at identifying the most viable solutions. Hamez graduated as a Don Jackson Fellow from SMU with a degree in finance from the Alternative Asset Management Center. Hamez is known as an expert on emerging markets, alternative investments, and entrepreneurship. Now, before I ask Hamez to start, I need to give some disclaimers. Number one, we are not providing you investment advice. Number two, conflicts of interest may exist. Number three, this is for education purposes only, all right? This is not an offering or solicitation, and you need to perform independent research. You need to perform independent research and due diligence. Okay, so again, is Bitcoin and blockchain commerce here to stay? To tell us from an investor's perspective is Hamez Mushtaq Awan. Hamez, I now turn the screen over to you.
Thank you so much, Simon. And I'm really thankful for the opportunity to come here and speak to a group of SMU alum and the larger Dallas community. these are very exciting times in the blockchain market. So I'm very happy to be in this call and share some insights that we have as investors in the space. Thank you, Simon, again for a very good job at these disclaimers. So I won't do them again. But I wanted to sort of break up the talk into a few different updates. And I think as we go through these updates, we're going to slowly together answer the question whether this technology is something that's here to stay. What are the different impacts that we can expect from it? What are the changes that we're seeing from it? So the number one update, which at the end of the day is the most important thing to us, is the adoption of this technology rising? Because we're strong believers that the only reason that any of this will be worthwhile or worth anything is if it improves people's lives. If people continuously come back, use this technology to improve their lives, that's the only reason that over the long term, it's going to accrue value and do it in a sustainable way. And so there's many different pieces of information and indications that we're seeing now more than ever before that show that there is actual usage of the technology and it is being used by people to improve their lives. One of those is this concept of decentralized finance, which they call DeFi. These are essentially financial services that are built on blockchain networks and don't necessarily have intermediaries like banks or financial institutions in the middle, but they sort of create these programs that can act like a bank, act like a credit union, but they're completely built on the blockchain. So we're seeing hockey stick growth just in the last few months as COVID has hit different parts of the world. A lot of people are scrambling for alternatives, and one of those alternatives is coming in the form of DeFi applications. And so today we're seeing almost $4 billion of value in these different financial applications that are built on mainly the Ethereum blockchain. But we're seeing incredible amounts of growth there, and that's definitely pointing in the right direction. One of the main sources of growth that we're seeing is growth in stablecoins, and Jack did touch on this a little bit. These are blockchain assets that are stable in their value, usually pegged to $1. We feel that as there is generally people scrambling in especially emerging markets to alternative safe havens like gold, the US dollar, people are also looking for US dollars that are digitized in their nature and easier to move around. And so we've seen just an absolute explosive amount of growth in these stable coins. And then as people are looking for yield in their investments, and yield is difficult to find in traditional markets, that's another one of the key killer applications that we're seeing on the blockchain that is getting incredible amounts of growth. But overall, people are looking for alternatives to the store of value. People are looking for alternatives to having sovereign currencies. They're looking for control over their own capital. And then people are looking for alternatives to yield. But what I also wanted to show you that it's not just the decentralized finance applications that are getting this adoption across the board in the two biggest blockchain networks, which is Bitcoin and Ethereum. You're seeing record numbers of new addresses being opened, and we use new addresses as an indication to new users. And so we're really seeing a very rapid growth in that. And why wouldn't we, right? Like we would expect that as the world becomes more digital, and more so now than ever, our interactions are becoming digital. This talk would have been in a physical space. It's becoming digital. As all of these things become digital, one of the most important part of the interactions between humans is the transfer of value. Why wouldn't that also become digital? And overall, as we're seeing in the traditional markets as well, tech companies are eating the lunch of traditional companies. And while many traditional companies are struggling, tech companies are stepping in, providing similar services, and actually taking that value and extracting that value from the economy. And so this is just another tech play that is also more compatible with the lifestyle that all of us are going towards. But even within executives, we're seeing record amounts of optimism, record amounts of a changing attitude towards blockchain and blockchain adoption. And so you can actually see the different years that Deloitte did this survey, and you can see that continuously the perception of blockchain and the expectation of its adoption has continued to go up every single year. And I think that all comes from education, as people better understand what the blockchain is about, because it's a lot broader than just a currency. That's one application of the blockchain, but not the only application. There's so much more that can be done with it. And as we're seeing those examples come up, and as people are learning more about it, executives and the general population is starting to see the value here and is starting to see the alternative concepts. At the same time that all of this adoption is happening, speculation is back. It's not back in the same degree or the same sense that it was a few years ago, but we pride ourselves in being very realistic when it comes to these things, and so we're always talking about both sides of the coin and trying to have a very conscious approach to this space. So while decentralized finance applications have gone up in their growth, it almost seems as if the prices have gone up much faster than the actual adoption. And as investors, when that happens, that makes us pretty uncomfortable. It makes us uncomfortable when users are going up at 100%, but price has gone up 2,000%. That doesn't really add up in our minds, and it makes us uncomfortable. And that's actually what we're seeing. A lot of these decentralized applications have had incredible runs over the last 3 months. So one of them in the last 3 months is up almost 1,000%. And that, in our opinion, is not sustainable. And what we believe is that a lot of new investors and a lot of new participants in the market don't really understand the technology risk behind these decentralized applications. So, if something breaks in the traditional banking infrastructure, there are ways to fix it. There's regulators that are, regulating those spaces. There's processes in place. But a decentralized application that started 3 months ago doesn't have the same type of track record for you to be able to trust it with billions of dollars. And so I do believe that a lot of people are understating the technology risks that comes with these things. And that's one of the reasons that these valuations are too rich for us. Another thing that we're seeing across the board is that there's short-term incentives for providing liquidity to these applications. And those short-term incentives are making people, making it seem like there's a lot of adoption. But when you adjust the numbers for those short-term incentives, the adoption isn't as much as people are seeing. And so, the information in the space, you can never take it for granted. A lot of it has to be scrubbed. A lot of it has to be adjusted to get a true picture of what's happening. But at the same time that that's happening, one of the other indications is a publicly traded, closed-ended fund that tracks the price of Bitcoin. And the reason I wanted to show you this entire chart is because every time the price of Bitcoin increases, the difference between the true value of that trust and the traded value of the trust expands. And so there's huge inefficiencies in the pricing. And to us, that's an indication of speculation. And so we're actually starting to see that happen again this month. We're starting to see the price diverge. And the more that the price diverges, the more to us, it's an indication that there's speculation in the market. And so having said all of that, when there is speculation in the market, investors can place themselves in a way that they actually benefit from arbitrage opportunities. So as speculation increases, it creates arbitrage opportunities that you can benefit from. And at the same time, volatility, there's actually ways to harness the volatility and exploit the volatility and actually benefit from it as investors. But overall, we are seeing some overstatement of the valuation of these companies and an understatement, an overstatement of the actual adoption that's happening. Another piece of good news, and this has really picked up in the last 6 months or so, is that the infrastructure that we're seeing in this space is really improving. And as a firm, we focus on blockchain infrastructure, and where we provide credit to these markets. We provide a lot of different services that we take from infrastructure and provide to the infrastructure. So we have very unique insights into this. And so I can confidently say that the growth that I've seen in the last 6 months has been the most that I've ever seen over the last few years that we've been in this space. There are a growing number of regulated, insured custodians here based out of the US that have insurance on their storage, that are regulated by the same regulators of traditional custodians, and they are providing this safe way of keeping our assets. At the same time, we're seeing cheaper sources of capital. So we're actually seeing a boom in the credit markets in the crypto space. And what that's doing is it's providing cheap sources of capital to market makers and brokers. And that's just an essential piece of infrastructure that needs to be put in place before we can really fund the growth of this space, because most of the funding was coming from equity sources, but now we're actually seeing credit being extended to these companies, which is a great indication that the quality of the companies is improving, the financial strength of the companies is improving, and overall the infrastructure is improving. And at the same time, we're also seeing the derivative markets, the spot markets hit record amounts of volume. And the more liquid that the market becomes for these assets, the easier it is for businesses to operate, the easier it is for investors to operate. And then as the derivative markets pick up, being able to hedge your exposure, being able to create interesting investment strategies, much more like what traditional investors have available in traditional markets. So these are all good developments in our mind. And then traditional infrastructure is coming to blockchain. And so we're seeing the biggest names in the industry, both traditional and blockchain, are going out and acquiring competitors, consolidating, creating really good prime brokerage models, regulators stepping in, like Jack was mentioning, and giving, allowing banks to custody these assets. But overall, we're seeing a complete change in the infrastructure and an overall maturing of the industry, which is a very positive sign, in our opinion. That was it for me. Happy to answer any questions on the call or after the call. Really thankful for the opportunity.
All right. Thank you so much, Hamed, for your insights. Very fascinating on all the updates on what's going on in this world. It's a lot of fun to watch the advancements that are being made in this investment space. And it's also cool to hear what you guys are doing at Plutus 21. So thank you so much. All right. So right now, what I want to do is I'm going to turn it over to looking at the Q&A. I'm going to take a look at some of the questions that we have, and we're going to try to answer as many of the questions as we can see. And so go ahead and type your questions into the Q&A chat box, and we'll try to answer those as much as possible here. So one of the things that, let me answer the first technical question that popped up, which is from Carlos. What is an address in Bitcoin or Ethereum? So in general, each blockchain identifies the users on the blockchain through a number, like an IP address. So it's the same idea, and it's an address on a specific blockchain. And so when you transfer currency between one individual in a blockchain to another individual, it uses this address exactly like an Ethernet address that we have on the internet. And so it's a very, very similar type of description. All right. Let me go down here real quick. We see a question for Jack. What stage are you relative to market adoption in terms of B4U compatible ATMs, etc.? And so, Jack, this might be a chance for you to talk about where are your ATMs nowadays, and where are your ATMs in this nowadays, and why are they at this location? So this is a good chance for you to answer this question and get some additional background.
So we started in Florida. So every, I won't say 100%, but the vast majority of ATMs in Florida from about Orlando south to Miami to Key West was a start. I'm actually, we're working today actually to power up all of the ATMs in the Dallas-Fort Worth Metroplex to be able to transact. And so the software required for an ATM has to be downloaded to the machine, because we took a course of action that said we're going to use existing ATMs, and what our model is cash, coin in, cash out. Is a little bit different than some of the others. And so I would say we have contracts in place and that will be at about 120,000 or so ATMs nationally. But we've opened up an office in Canada, Australia, and Brussels, with one that we have in South Africa. And so we're seeing this as a global adoption, not just a domestic adoption.
And to build on that, Jack, I know that you travel a lot. I mean, your American Airlines frequent flyer miles are through the roof. Tell me what you're seeing around the world relative to cryptocurrency adoption.
So, I think the United States was, I read last week, that we're the 5th highest per capita adoption. And so Australia, we believe Canada, Australia, is very strong. We're seeing in the sub-Sahara region of Africa. And then with the introduction of the digital yuan and the digital yen, so the Asian market is getting ready to become a major player in this area.
Very good, very good. Let's see, we've got a question from Baxter. In your opinion, what are the biggest questions regulators can answer to help blockchain technologies flourish? Oh, great. So this applies to both Jack as an investor, as an entrepreneur, and also Hamez as an investor. And so Hamez, why don't we start with you? How can regulators help this space move a little bit faster?
Yeah, so we're already seeing very good examples of that outside the US. There's pretty significant regulatory arbitrage where the regulations in some countries are just far superior to the US when it comes to this space. So you're seeing this brain drain happening where a lot of companies are leaving the US to go to these friendlier jurisdictions. So there's very good examples already that are out there in the wild and being tested. But essentially, our regulations, last time they were updated for anything that is sort of a security were 70, 80 years ago. And so those regulations are really out to date and are very specific for a specific type of asset. Now, as the asset classes are evolving and changing, there might be a need for there to be a refresh of the existing regulations, or maybe just completely new regulations for people and entrepreneurs and investors in this space. But overall, as investors, there's not really much of a regulatory issue because you are just holding another capital asset, and regulators don't really have a say in what type of investments you can invest in. Really, from the entrepreneur's perspective, is where the real regulation comes in, and just having more clarity there, maybe refreshing some rules, clarifying some rules, just providing more information would be a very good step towards the right direction. Because right now, a lot of people are operating in this gray area because there hasn't been clarity, but there hasn't been a yes or a no. It's like a maybe in most situations. And so as long as there's a yes or a no, that will give people more confidence and clarity to come to the US and build their blockchain businesses.
Very good. And then Jack, from your world travels, what are some of the other countries doing regulatory wise that we can learn here in the US that can accelerate the entrepreneurs to get into this space?
I think that when I travel in the EU, certainly Berlin, I think Germany is taking a front seat in this whole process. I think Malta was going to, and they've kind of taken a little step back, but Malta was very much committed to the blockchain space, certainly Sweden. And so I would say the EU, we'll call it the Eurozone, is certainly have a lot of rules and regulation that could be I guess, learn from. I think my message to a regulator would be blockchain is not one size fits all. And I think that as I've talked to regulators at the federal level, it's kind of like it's all the same. And it really isn't. An ATM transaction for $200 is not the same as a $200,000 investment in Bitcoin. And so I think that in the EU, they kind of get that. I think in Australia, they get that. And so I think others are changing as the governments look at stable coins or government-backed currency. I think it's forcing the regulators. We have been working with the Central Bank of Nigeria to help them understand what this is, the whole concept. And so I would say, regulator, do your homework, and one size doesn't fit all.
Very good. Thank you, Jack. And I will also give a shout out to Malta. Jack actually introduced me to some folks in Malta, and I flew out to Malta, and little did I know that Malta markets themselves as the blockchain island. So there's a lot of very interesting things going on in Malta. This next question from Rodrigo is actually very, very fundamental and foundational. How in the world do regular people, start getting into digital currency? How does that even work? And what can regular people do in terms of, placing their trust in this new technology? And so I guess it's sort of a two-part question. How do you get into cryptocurrencies, and where is the tipping point where the general public will actually start trusting this? And I'll go ahead and ask Hamez to take that one.
Yeah, so I would say that, today all of the conversation is sort of around how does the infrastructure work? What does it all do? All of us today have sent or received an email, but none of us actually know how email protocols work. And that's because the UI, the user interface, is so easy to use and so simple that the only thing that the user cares about is that they're getting messages fast and easy and cheap, and they don't actually have to understand the underlying technology. And so what needs to happen in the blockchain space is that the user interfaces, the applications, the websites need to become so user-friendly that to most users, 99% of users, it does not matter how the technology is working as long as the product or service is better and cheaper. And so we're coming to that point where the user interface, when we started, you absolutely had to be a programmer to do anything in this space, right? Like you had to know all of the ins and outs of blockchains to do anything in this space. That's not really the case anymore, right? Like we just saw Jack's presentation. He was able to do this by pressing continue and next on his phone. And so the user interface has come a very long way in the last few years, and it will continue to get better. And the day that we hit mainstream adoption is going to be the day where we hit these really clean, simple user interfaces where the conversation with the technology becomes not as important, but the conversation about, is this a better product or service, that becomes and comes to the forefront. And so that's already happening, and it will continue to happen.
Very good. And as a matter of fact, when I teach my class on blockchain entrepreneurship, one of the things I talk about is the early days in the .com. They were asking exactly the same question. How can we trust this thing called the internet? All right. Well, the answer was you need a killer app. And the killer app was basically eBay and Amazon. Those were the two killer apps that sort of pushed the general public to now dabble into the internet. And so that's one of the things that folks like Jack in the entrepreneur space is trying to come up with killer apps that will help the regular mainstream folks use their convert into this area. The next question, I think it's a good one for Jack. And Jack, it says here, in terms of using and investing in digital currency, are there any data and demographics fueling the growth? And so from your experience, it could be the ATM, or it could be people who are calling you to want to learn about how to get access to digital currency. Can you talk about the demographics of people who are contacting you?
So demographics of the merchants and the ATM, I mean, that's pretty much all over the ballpark because they own so many ATMs. But we're seeing, I would say on the user side, it's like 18 to 35 seems to be the age demographic that we're seeing. It's people who bought Bitcoin for an investment. I think today people buy Bitcoin primarily for investment, thinking it's going to go up in price. And so it's the same group that's looking how to cash out in a simple, easy way to be able to liquefy or to liquidate their inventory. And so I would say right now it's the millennials and Gen Zs that are really driving the market. But there's an interesting new category we're seeing, and that is individuals in the 50 to 60 range. And it's been interesting, and while I haven't done extensive research, it's basically those who were able to buy Bitcoin maybe a year ago, 2 years ago, and now are looking for a simple, easy way to liquidate it. So we're seeing the market really expand and be able to really drive. And so we're seeing a lot of new people. I saw something with the adoption, the number of wallets, and I don't know if you have it, but it seems as though there's like 20 million wallets exist in the United States. Now, some have multiples. And so what's going to drive all the usage is we're finally beginning to answer the question why. And as we can answer the question of why, we got the what and the where and the how and all of those, but the why is beginning to get there. And it's more than just investments, it's utility.
Mm-hmm. And I'd like to just add to that. I think that in economies where we do have a stable financial system, stable government system, you're seeing a lot more adoption coming from the younger populations, because it's not really it's not a need, it's more of a want. But in developing countries, we've seen again and again proof this, it's actually the entire population. Because a currency crisis is not a millennial crisis, right? A currency crisis is everyone's problem. And so outside the US, we're seeing, first of all, most of the adoption is outside the US, because truthfully, that's where the pain is the most. And technology always gets adopted first where the pain is the highest. And so those people will go out of their way to understand, figure out how this works, because they are in such dire need of an alternative. And so outside the US, we're seeing entire populations, regardless of age, actually jumping in, trying to understand this, because it is truly a need for an alternative for many different parts of their lives.
Hamed, stay on, and I want to follow up on your pain comment, and this actually fits what Cody is asking. Cody is basically asking us from a corporation perspective, from a large company perspective, what pain do you see that will finally push them over to seriously thinking about adopting blockchain technologies? And so basically, you've seen a lot of stuff going on in different industries. Tell us about your thoughts on that question of the pain in corporate America or corporate global.
Absolutely, yeah. So what we've seen in the last 20 years is that software companies are eating up the lunch of everybody, right? Like you essentially have these giant software internet-based companies that are coming in, extracting value from traditional businesses, and are the winners today. But what they're essentially doing is they're taking one company and replacing it with another company. At the same time, they might be more efficient, but they're not at peak efficiency. Peak efficiency is reached when me and Jack can do all of our transactions peer-to-peer. When I can send him everything that I want in a safe way, he can send me everything that he wants in a safe way, and we can interact peer-to-peer. In order for us to go peer-to-peer, we actually will have the end state of the technology will not just be one software company eating the other software company. It will actually truly be software eating software companies. And the end state of the technology is pure software that is built on decentralized infrastructure where everyone can interact on a neutral basis, but we are truly going peer-to-peer with each other and removing the inefficiency of a corporate structure, a CEO, shareholders, and all of that inefficiency that Amazon reduced, but still has all of that inefficiency. And so until you get the peer-to-peer transfers, which is a pure software play, you're not at peak efficiency. And so the smart companies today are going to adopt the technology because they know that competing with a piece of software is basically impossible because their costs are infinitely lower, their scalability is infinitely higher. And so you cannot compete with them. on a pure head-to-head basis. So you have to adopt the technology. And so all of these companies that talk about how innovation is the key to their success, they have to keep up with that. Otherwise, they're just going to get disrupted by a piece of software that's going to replace their entire business.
Wow, very good. Wow, that's a fantastic answer. This next question from Andrew, Jack, I think is right up your alley. He says, how do you protect your business on compliance if you start accepting Bitcoin? Does that mean every business that accepts Bitcoin now has to go through AML and OFAC and all these other money laundering stuff? What's your answer to that, Jack? That's your area of expertise.
It is, and that would probably take hours to answer in full, but I think that the answer is you need to meet with the regulators of your state and to explain your business model. I've done that, and get their opinion of what is going to happen. Or I guess if they're, you can always get a lawyer. But being able to understand the regulatory, because it's not all the same. Investment side is not an ATM transaction, and so it's frustrating for me that the rules vary, and you can go from state to state. New York, from a regulatory standpoint, is just a nightmare. It's almost as though they sat down and said, how do we stop Bitcoin transactions through just weighting them down to other states that have very little. And so understanding the regulatory landscape, so example, we're an MSB. I believe that you need to register as a FinCEN MSB. I don't think you have to, it's not the law, but it's one of those, hey, it's like belts and suspenders. It doesn't cost you anything, and you just file reports. But it gets deeper than that. When you get into the money remittance, there is much less regulatory guidance than there is in the investment side. Hamiza's side there's a lot of information there. So I would say do your homework is the short answer to what you're looking for.
Okay, very good, Jack. Wow. And so I guess that's sort of a little bit of a hurdle then for businesses to adopt this payment system if they have to go through this additional process. But that's sort of how it works right now. And so it's good to be aware to do this with your eyes open. We have time for one more question, and this one, it says to either to Jack or Hamez, in the U.S. market, what is the current percentage of crypto in payments? Okay, so like how many businesses are actually taking crypto as payment? What is your prediction of the penetration inflection point, and what will cause that inflection point? So just generically speaking, if there are 100 businesses in the U.S., what percentage of them are currently taking crypto? What would you say?
Amish, you want to take a shot?
Yeah, go ahead, Jack. You'd probably have better numbers, but I would say it's less than 1% in the U.S.
Right. I think that one, there's very little regulatory oversight or requirement in a merchant accepting Bitcoin. That's not a problem for merchants, not a problem for ATM operators. And so I would think that there are thousands and thousands of merchants that do accept Bitcoin. Overstock.com got a lot of publicity for being maybe not the first, but one of the first. And so you're going to see it's expanding because Bitcoin sells and is spent it's their fun money. When you make an investment in a Bitcoin and it's successful and now you have this extra money, spending that is what I would call discretionary. It's that income that you can spend and have fun with it, right? That's why I want to build an ATM infrastructure globally so that you have a way to access that money. And so merchants are the same way. So I think that you're going to see adoption because they want that money. And the last thing I tell merchants when we talk to them is you have no access today to about $300 billion of value, the market cap on a, say, Bitcoin or crypto. And now this opens up a whole new way to expand your market offering, have cash that you'd never had access to before. And so I think that there's other merchant solutions or elements that make it advantageous for a merchant to accept Bitcoin. 5 years from now, when we have this call, it's going to be a much, much different answer, I think.
Very good, very good. All right, well, so it is now 10:01. I appreciate everybody being on the call today. I especially thank you, Jack. Thank you, Hamez, for doing this. And I thank you all for participating this morning. You will receive a survey from us regarding today's program. And I hope to see you on September the 17th at 7 a.m. for our next webinar, which is the Southwest Venture Forum. Go to smu.edu/SWVF to register. Goodbye, everyone, and safe travels. Thank you again, Hamez. Thank you again, Jack, for doing this.
Our pleasure.
Take care, Jack.